So the current stream right now, right, it will be, a part two for the previous one, right? The goal, right? And this is just for everyone. You want to make money, right? You want to get better than you already are. Some of you are doing very well, but you want to get better. You're just freaks of nature, right? You just, want to be crazy at this thing, right? So yeah, we're gonna have a part two, and this is just part two for the previous live stream, right? Everyone needs to pay attention, take notes, and I'll just try to be straight, try to go straight in and be, as on point as possible. No yapping about family, no yapping about anything else, just work. So here, of course, we have Forex Factory, right? And today we saw some movement, right? Which, was it predictable? If you were there, watching the charts, it would be. But without, being during, present during the session, watching price. Meanwhile, the precision swing point formed, which, sent price into the direction that it went. Because that's, what precision swing points do, right? It's usually followed by, three main points that we will touch upon when we go to the, last slide or the last chart that we'll be looking at. So no news today, but we got the Monday model, right? It usually forms after sequential SMT between Friday and Monday, right? That's basically what it is, Monday expansion model, right? Tomorrow we have news at 10 a.m. Eastern Standard Time, right? And it's very important to know, right? There can be movement in the market without a market if there is sequential SMT, right? But it's less likely for there to be a high probability setup whenever we have a high impact news event without a sequential SMT, if you understand what I'm trying to say, right? So there must be a cracking correlation. That's what's important more than everything else. But, the economic calendar, that comes second, right? But the cracking correlation is the most important thing, right? At the end of the day, right? There'll be times when you don't really need to be looking at the economic calendar, but it's just, something that gives you an edge. It's still important, but there are still things that are more important, right? Wednesday, we have no news. And then Thursday again, and just by looking at this, we can expect higher low weeks for some assets, right? To, form in this day, due to the fact that it has most of the news events, right? So usually whenever you don't see, much, one-sided movement, on Monday, Tuesday, Wednesday, because sometimes you see Monday given expansion, drop in price, go up, and then Tuesday and Wednesday you have price just return to the 50% off range or just completely takes out that high. And then, Thursday just forms a precision swing point and then price expands. Friday again, we have news, as you guys can see. And, obviously you already know what we look for during these times, right? Sequential SMT and precision swing points. Here, right, you guys can see that here we had sequential SMT between, the previous week and the current week. And that happened today on Monday, right? So, here we had price take out this high, S&P 500 on the NASDAQ, price failed to take this high out. On the Dow, right, price was overextended here. What's the reason for this, right? So usually, right, whenever you see, for example, we're not focusing this bunch of price action right here, right? We're just looking at this high, which was a precision swing point. And yes, above precision swing point, there's an immense amount of liquidity. So due to the fact that this high right here was a precision swing point, right? As long as there has sequential SMT above this one, right, you can expect price to return within the range. And that's what you're looking for this right here. You're not looking to just be holding forever, right? You're just looking to get in, get your setup, and get out. as a day trader on the 50-minute time frame, right? So here, when we dropped, we failed to take the low of the week out, right? And we ended up closing here with the high of the week being Thursday and the low of the week being Monday. Here, we close this day with what we expected to see, right? The high of the week being Thursday and the low of the week still being Monday, right? Over here, right, on this day, we took out both the high of the week and the low of the week. So whenever you see something like this, a whiplash happening, this is not just, for this cycle, right? This goes for any cycle. Could be the 90-minute cycle, could be the micro cycles. It doesn't matter, right? Whenever you see price take out the high of a cycle, right, then takes the low out, right? Meanwhile, the other two don't take the low out, right? And worse, this occurred when? On Thursday, right? That's why we had price, decoupled around here. Right? Just kept expanding, higher, and seemed like there would be no reversal until what? Until this candle right here, right? It's kind of S&P 500. This is a precision swing point. Keep that in mind. And you'll see how, as we've been talking about before, we've had, lower time frame precision swing points formed within the higher time frame ones. And this is literally the candle which causes the reversal. So this candle right here, what would happen? There would be no reversal. Or, it would be pretty short-lived, like, something like this. Just, open, just barely trade below, create a tiny wick, then just go up, right? It won't be, what I would call important, right? So these are the candles, and you can see that that's what happened here. We had a precision swing point here, right? And then another one was here. Price traded above that precision swing point, dropped. Here we had the same thing again. Price trades above this precision swing point and dropped. Literally, all the highs here are precision swing points, right? It's just here, right, where we did not see a precision swing point right here. But, right, I promise you, and trust me, if you can do this, right? If you go here in this candle right here, you will find a precision swing point, which will be the exact low, right? And we'll probably see that as we look at the other, time frames. So with that being said, and you see all of the information that we have here, you go here again. So now we're looking at the 1 hour time frame, right? Here you can see that we had a 3-stage sequential SMT, right? As you guys can see, this is always there, right? Here, there was a higher time frame precision swing point, right? Which is where price, fell from. So here you can see that price took this high out and took this high out right here and took this one out as well. So it took 3 highs out, right? At the same time with this candle, right? Here, you can see that price failed to do so, which is why we had, such weakness in the NASDAQ, right? So this isn't any of the sauce right here, right? This is just showing you, right, everything that led to price dropping, right? Things that we've talked about before many times, as I'm pretty sure that you guys understand and know. So here, first of all, this is why, price didn't fall as much as the NASDAQ due to the fact that this was not a, failure swing, and this was. But not because, this happened, mean that it would not be the highest probability trade. Most times, the trade that, doesn't fall the most, is usually the most high probability trade. Now here is, where we will, get straight into, price action, the model that we're looking for. So we're looking for 2 aspects to double, which is what doubling theory is, right? Which is a part of what doubling theory is. So first of all, we need stack true opens, which is it there? Yes. Then we need at least 2 sequential SMTs. So we need to have the sequential SMTs which we are searching for on the 15-minute time frame, right? We need to have sequential SMT between the sessions. Then we need at least sequential SMTs between the days of the week. Or we need to have sequential SMT between the weeks of the month, right? Do you understand? So here we have all three of that. Would it be possible to just be using one cycle? Yes, it would be, as long as there is a position swing point, right, that would facilitate a reversal. When do you look for price to close above the high? You look for price to close above the high whenever there's not a precision swing point, because there are times when this will happen, but there will not be a precision swing point, but price will still reverse. And, here we have everything, right? There, everything that we need to look for, right? If you go down to the 5-minute time frame, right, you'll probably find a precision swing point. If you go down to the 5-minute time frame, you'll probably find a high probability order block within this candle, right? So if you're looking for lower time frame entries, as long as you have everything in order, right, here, right, we're above the true day open, which is here, price traded up, true day open, and here we have the true session open. When is the true session open the most important? It's the most important whenever you have news, high impact news event within that specific quarter of the day. So if the true session open, if we're supposed to be focused on the true session open of the afternoon session, then we need to have, for example, FOMC, CPI, or the news events, which usually, give us a lot of volatility in the fourth quarter of the day. We need to have something to look forward to during that quarter of the day if we're supposed to focus on it, right? So here you can see that this, it was beautiful price action, right? And over here, you can see that price failed to trade above this high, right here. Even here, failed to trade above this high as well, right? Sequential SMT doubled, right? So price traded here. It formed a precision swing point right here. And if you look at the 5-minute time frame now, right here, which was where we had the formation of the 5-minute precision swing point, right? We had this candle right here, which is the last upwards candle, before price fell down. This is the real order block right here, right? So everything else, just doesn't matter, right? This is the order block right here. We had price drop down, shift, right? And this is a real shift, right? You had a precision swing point, price closed around here, dropped below the true session open. That's a shift. So you can see this, but the only reason why, this even matters right here is why? Because there's a precision swing point, right? There's a precision swing point, price then dropped. There is a, what people classify as a quote unquote market structure shift. But here we have something more important than that, something that, as I've said before, the true open, they sometimes work as support or resistance, right? Then you had price drop below it, trade back up into that, up into this candle at the same time. There's no gaps here. Then it just falls, right? Here, you can see that we had sequence SMT also between here, which was this bunch of price action is the New York session of today, and this bunch of price action today is what? The afternoon session. There's no news, which is why you don't see, price moving like that, right? So again, what you should be focused on is this right here, right? You don't need to go down lower than this. Even if you have a precision swing point here, right? And I'm just looking at the S&P 500 and NASDAQ, right? If you want, you can, compare to the Dow, right? You can compare to the euro. You can compare to the Great British Pound. If you want to see, the lower time frame sequential SMTs, right? Lower time frame intermarket sequential SMTs, my bad, right? But this is a 50-minute time frame, right? You need a higher time frame sequential SMT than one, that's between the daily cycle, which is comprised of 4 sessions. So sequential SMT on at least the weekly cycle or within the monthly cycle. Nothing higher than the monthly cycle. So, it would be better to have something happen between the days of the week. Then you look for something to happen between what? The sessions of the day, 50-minute time frame, right? We're above the true day open and the true session open. There's a precision swing point on the 50-minute time frame. When this happens and this candle opens, right? You don't need anything else than that, right? And then if you want extra confirmation, you just wait for price to trade below the true session open. Once this happens, and we have a precision swing point here, doesn't matter if it's below it, as long as there is no precision swing point here, which there is one here on the 5-minute time frame, which is why we had this happen. You see, you can't, right? You can't make this stuff up, right? It's right there. It's right here, right? It's insane, in my opinion, right? But it's right there and up here, right? We have the 50-minute time frame sequence SMT and the 50-minute time frame precision swing point right here, right? And here, right, we're looking at the US dollar index, the euro USD, and the Great British Pound, right? So first of all, right, you can see still, we're within a range, right? We'd like to see some form of sequential SMT or precision swing point followed by expansion, before, doing anything right here. We have SMT between these 3 assets right here, right? But still, there is, nothing that is, obvious in my opinion to do. We still see the US dollar looking weak, and it will be like this, until we have some input within the market, right? Until we have volatility enter the marketplace. The same thing goes the opposite goes for the euro and the British pound. Which markets are the clearest to trade right now? Right there, right? And it's usually like this. The S&P 500 and the NASDAQ are usually the cleanest markets to trade. And those are the, assets which have the most money being moved through them, right? From a commercial standpoint. I hope that you found this useful, right? This right here, right? Again, let's repeat what you need. You need stack true opens, 2. If you want to use the 15-minute time frame, you need the true session open to be above the true day open, right? And here, right, there was a 4-hour gap here, but it doesn't really matter, right? Because without this being there, then that will not be important, right? Without there being sequential SMT, it won't be important. Without there being a precision swing point, it just will not be important. So this is the clear, conceptual method that you need to be, if you haven't found your personal model, which I know most of you have. There's like so much messages, which I have been answering some of you guys, but there's just a lot. But I'll be getting back to those, over the next few weeks, of course. As I've said, right, it's just that, moving countries, I literally had to fly out and then come back in to, collect some things, shipping things. It's actually insane. But when that's over, then we'll have more time together. So I hope that you found this useful, and good luck and good trading.